Robin Marshall, Director of Fixed Income at Smith Williamson Investment Management. Hi, Robin.
Good morning.
As Arian says, he is stuck between a rock and a hard place, isn't he?
He is, and he doesn't really have more than, he only has one instrument, which is interest rates. He has several targets, as Mohamed Arian was saying, whether it be trying to equalise growth rates, trying to preserve the financial stability of the Eurozone. So he's not going to get this perfectly right, but I think it would be too dangerous now to go raising interest rates with the periphery as it is.
What sort of rhetoric, then, would you expect today from the President?
Well, I think he'll huff and puff about inflation expectations and the dangers of those getting entrenched at higher levels, because that's, of course, the real problem. And, of course, the core growth rates are much stronger. But he won't risk blowing the house down, I think, by suddenly signalling an early rate increase with the periphery as weak as it is.
Yeah. The emergency lending measures, which of course they implemented during the crisis, they're coming to the end of their...
Yes.
Well, it's the end of the first quarter,
Absolutely.
Isn't it? So does he have to make sort of comment, maybe to extend them, or
yes.
What do you think he needs to give us on that?
Well, again, they're going to have to leave their options open.
Yeah.
With the Irish situation, of course, is still perilous. We know the ECB is underwriting the liquidity to the Irish banking system, so that may well have to be left in place and extended. It's hard for them to abandon those emergency measures. The difficulty is combining that with the signal that they want to squeeze inflation and prevent it getting entrenched in expectations in the medium term.
We've had all sorts of forecasts, Robin, in the last 24 hours. AXA Investment Managers says Portugal's going to accept a financial bailout within the next few weeks. Do you think they're going to accept one before the EU leaders meeting at the end of March? Would that be a sensible time?
Well, I suspect they may want to drag it out a little longer, but it's hard to see how they can avoid access to the FSF. They have big refinancings coming up in April and June, about 10 billion euros in total. So there's a big, so they'd need to access.
They can't afford it, can they? With
exactly.
10-year yields,
10-year yields above 7 now for some weeks. So I think the difficulty for them is they're going to follow Ireland and Greece to the situation where they're going to be priced for default by the markets, and this is the real difficulty. They're in a debt trap now, and they're going to need FSF support to try and get out of it.
And the other comment that stood out in the last 24 hours from Kenneth Rogoff, who said that Greece and Ireland will need to restructure debt. Spain and Portugal may also face doing so. Is that your forecast?
Yeah, I think Spain is a much more of a 50-50. Well,
it's probably
70-30 in favour of avoiding it. Exactly. Yeah. The difficult. I think Greece and Ireland are probably gone and will need to reschedule. I mean, they're in clearly the liquidity trap. The 9% yields, 8-9% yields, there's an insolvency problem. They're not going to be able to grow fast enough to get out of that. I don't see how that can happen. You'd say Portugal is going that way. Spain has done what it can to refinance the financial, to collapse the financial system into a smaller number of institutions, recapitalise. I think they have a much better chance of escaping it. And of course, that's a much bigger test for the Eurozone as well.
Robin, thanks for joining us today.